Ever wondered why, when you check your bank statement, every transaction is listed as both a credit and a debit? Or maybe you've heard the phrase double entry accounting and thought, that sounds complicated. Do I really need to know this? Well, stick around, because understanding double entry accounting isn't just for accountants. It's actually the secret sauce behind every successful business, big or small, and it can help you make smarter decisions with your own money. So let me paint you a picture. Imagine you're running a lemonade stand as a kid. You sell a cup of lemonade for $1. Where does that dollar go? Most people would say, well, it goes in the cash jar. Simple, right? So what if you had to buy lemons and sugar first? Now things get a bit trickier. This is where double entry accounting comes in. And trust me, it's way more interesting than it sounds. Let's break this down into a few sections so it's easy to follow. First, I'll explain what double entry accounting actually is. Then I'll show you why it matters, not just for business, but for anyone who wants to keep their finances in check. After that, I'll share a couple of examples about how double entry can really save you from some embarrassing mistakes. And finally, I'll give you a simple way to try this out yourself, even if you've never done any accounting before. So what is double entry accounting? At its core, it's a system where every financial transaction is recorded in two places, once as a debit and once as a credit. Think of it as a seesaw. Every time you add weight to one side, you have to balance it out on the other. This method was first described way back in the 1400s, and it's been the backbone of accounting ever since. Let's go back to that lemonade stand. If you sell a cup for $1, you record a $1 increase in your cash, that's your asset, but you also record a $1 increase in your sales revenue, that's your income. Two sides, perfectly balanced. If you spend 50 cents on lemons, you decrease your cash by 50 cents, but you also record 50 cents as an expense. Every transaction affects at least two accounts, and the total debits always equal the total credits. That's the magic. Now, why does this matter? Here's the thing. Double entry accounting is like having a built-in error detector. If your books don't balance, you know something's off. I remember when I first started freelancing, I tried to track everything in a single spreadsheet. It worked until it didn't. One day I'd realized I double counted a payment from a client. My numbers were off, and I couldn't figure out why. If I'd been using double entry, the mistake would have jumped out at me right away. But it's not about avoiding mistakes. Double entry accounting gives you a complete picture of your finances. You can see not just how much money you have, but where it came from and where it's going. That's huge for making smart decisions. Businesses rely on this system to track profits, manage cash flow, and even catch fraud. And honestly, once you get the hang of it, it's kind of addictive. There's something satisfying about seeing everything balance out. Let me share a real life example. Jill opens up a small cafe, and for the first few months, she just tracked her sales and expenses in a notebook. But when tax time came around, she realized she had no idea how much inventory she'd used or what her actual profit was. She switched to a simple double entry app, and suddenly everything made sense. She could see exactly how much she was spending on coffee beans, how much cash was coming in, and most importantly, how much she was actually making. It was a game changer. And honestly, you don't have to run a business to benefit from this. Even if you're just managing your personal budget, thinking in terms of double entry can help you spot patterns and avoid those "where did all my money go" moments. So how can you try this out for yourself? You don't need fancy software or an accounting degree. Grab a notebook or open up a spreadsheet. For every transaction, say buying groceries, write down what account is going up, maybe your food expenses, and what account is going down, your cash or bank balance. Make sure every dollar in matches a dollar out somewhere else. It might feel a bit weird at first, but give it a week. I promise you'll start to see your finances in a whole new light. And if you're already using an app like QuickBooks, or even just your bank's transaction history, you're seeing double entry in action, even if you didn't realize it. So here's the big takeaway. Double entry accounting isn't just for accountants or big companies. It's a simple idea that can help anyone keep their finances organized, spot mistakes before they become disasters, and make smarter decisions, whether you're running a business or just running your life. If you found this helpful, try tracking your own transactions for a week using double entry. Let me know in the comments how it goes, or if you have any questions. I'd love to hear your stories. And if you know someone who could use a little financial clarity, share this video with them. Thanks for watching, and remember, every dollar has a story, and with double entry accounting, you get to tell both sides.